Look, if we are in business of lending money, NPS will happen. It's the pace, it's the quantum, at what rate they happen. Of course, if we look at the NPA accretion in recent past, they have been at a faster pace. But ultimately, remember one thing: if I talk about my balance sheet or my stressed portfolio, about 58-60% of it comprises of core sector. And on the flip side, if we are looking for economic growth of 7.6%, it can't happen without core sector being fixed. You talk about steel, you talk about cement, you talk about roads, you talk about ports, you talk about power. And ultimately, most of these projects are good projects. Cash flow is the issue for so many reasons. That would be another time, another debate. But unless otherwise, economy gets going as soon as possible, these woes will remain. I can vouch for my number because I know my numbers and I know my balance sheet, I know my loan book. The accretion of NPS would happen, but the pace may decline in the times to come.
So would you stick to your outlook for the coming quarters that you had put forward earlier?
Now, the outlook we had given was about deposits and advances and NIM. So deposits will continue to hold our guidance. It will remain in the same range. Advances we had given, the loan book growth we had given, our guidance at the beginning of the year was in the range of 10 to 11%. That we intend paring down to about 9%. And NIM was at exit NIM was at 2.5% or so. That we are paring down to 2.4% for the simple reason that's AQR. No, I am in for AQR. If it is to be cleansed, it's to be cleansed. And it's a bitter pill. Better you take and faster you take, it will be keep you progressive, healthy. That about the banking sector also. Therefore, we have pared down our NIM from 2.5 to 2.4% exit as at March 16.
So how does corporate loan uptake look at this point? Do you see demand? Because considering you just highlighted the dire state of the economy, where really do you see the growth coming in as far as loan uptake is concerned?
There is just trickle from the corporate sector, especially only those projects which have completed. They are coming in for working capital. A, B, many of these 525s, they need additional funding. It's coming from there, but predominantly is still for the drivers have been retail, agri, and MSME.
So you don't see too many signs of revival as far as capex is concerned in the private space and in the public sector space.
Public sector can do it tomorrow morning. They are sitting on pile of money. But as the private sector is concerned, and when we are talking about private sector, we are talking about that core sector. The capacities which have already been in place for quite some time, I don't think there would be any fresh capacity coming in near future. So any big demand from the private sector, corporate, I don't think that would be, I wouldn't have a great hope from.
So we do have the fiscal deficit number that we are all keenly watching. The finance minister is keenly watching, and there's a balancing act to do as far as the RBI and the finance ministry is concerned. But having said this, the government is also committed to provide capital to banks to meet their capitalization requirements. What headway has there been on this front? What have you heard from the finance ministry as far as this is concerned?
Look, post Indradhanush, government has been walking whatever they talked about. Typically, it happens that capital infusion happens in the last 52nd week of the financial year, by and large, or 51st week of the financial year. This time we got that capital, our banks were infused with the capital in Q2 itself. So, if we read different statements made by the Honorable Finance Minister or Minister of State or from Department of Financial Services, the government seems to be committed to about the capitalization of the public sector banks.
Sir, and what do you really want to hear from the finance minister on the 29th of Feb? Any budget expectations, a budget wish list you could share with us?
Oh, as a banker, public sector banker, I would say you should give a little more money towards the capital of the banks.
How much more, sir?
Oh, that's a difficult question. Look, I'll tell you, we should not be greedy. From public sector banks' point of view, more capital you have from the government, their shareholding goes up. With the going up of the shareholding, the free float of my share gets reduced. If there is no free float, where would the market capitalization would come from? So it should be just the adequate amount of, like the sugar level in the body, just the right amount of the capital. Ideally, about 2.5% over the prescriptive limit of different sets and subsets of CRAR.
Mhm. So my last question, so what are your capital raising plans? You just mentioned that capital should be just at the right amount. So what is the right amount for Union Bank of India? What are your plans on this front? How much are you looking to raise?
No, we have been consistent in our statement. Me, my predecessors, perhaps also. We should also always be having about 1.5 to 2% higher than the prescriptive limit. We are not bad as of today, also. But if economy picks up, as and when it picks up, we will need capital at that point in time. A, B, we got 1,080 crores from the government this year. So as of today is a 63+% government shareholding. We have got permission, all the permissions in place for raising QIP of 2,620 crores. The issue is, at this share price, should I raise? I mean, I'm shortchanging the institution for all the times to come. That I won't. Even we have got about 4,000 crores 81 bond headroom. But again, at what rate when my base rate is 9.65? If I need it, I can raise it. If there is appetite for loan at the right price, yes, I'll go for it.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.